Hello, everybody, and welcome to this week's bi-weekly community call. We hold these calls every other Tuesday at 9 a.m. Eastern and 1 p.m. UTC at the Nexus Mutual Discord. Today, Brave will first walk us through how the tokenomics project is progressing. We have come quite far with parameters discussion, and I am looking forward to the different packages that will hopefully come along. And then he will recap some ecosystem updates with Nexus Mutual V2. Nexus Mutual is now offering a risk-sharing infrastructure and has executed impressive partnerships with OpenCover, Univ, and Sherlock. We will go over these and explore further how Nexus Mutual is expanding the risk-sharing ecosystem in different environments. And then he will share a capital pool investments update as the ETH allocation in Kiln is now active on our Enzyme Vault. And then I will give some updates regarding the upcoming changes to the Nexus Mutual Discord. We're trying to make our Discord more accessible for our community, and we're always looking for feedback. Last but not least, Hugh will share his weekly foundation update, and then we will review the latest week.
Today, I'll go through and briefly summarize the previous discussions and talk about the current Part 2 discussion, and I will start on the next slide. So, in the last month, we've gone through a couple of the phases of the liquidity parameters discussion. This is basically broken into two parts. Previously, before we started these discussions, we had the education phase. Before part 2, we had part 1, where we focused on answering 3 core questions, and there was a snapshot signaling vote that was held between August 21st and 26th. The answers from those signaling votes were used to inform the discussion in part 2, which is currently underway. And in this phase, we're discussing and sharing views on the parameters that are needed to achieve the outcome that members have signaled their support for in part 1. Moving to the next slide, you can see the snapshot signaling vote results from part 1. Again, these are used to inform the discussion in part 2. And the goal is to find a parameter package that can achieve the outcomes that members signaled support for in part 1. You can see the following parameters are included in this part of the discussion as per the white paper in the overview post. And that's the target liquidity, the liquidity speed in and outs, the fast liquidity speed in, initial budget, and the ratchet speed for the above and below pools. Moving to the next slide. So, as a reminder, the broad goals of the RAM and of these discussions, we want to bring the internal protocol NXM price and the open market price closer together. We want to increase book value over time, initially provide significant exit liquidity for those who are looking to exit at a price close to book value, and eventually following the open market price. And then we want to sustainably capture capital in the mutual when the open market price exceeds book value. So looking through some of these goals, 1 and 2 have been achieved by definition via the design of the RAM mechanism. 3 was addressed in stage 1 of the discussion, and some parameters will be locked in accordingly. And this conversation, from what Ray had shared, mainly focuses on how to best achieve 4 and 5, given the constraints from the third point there. So far, this discussion has been live for a little more than a week and a half. The overview post went up, and then Ray had shared some of his analysis on the forum. So if you look on the forum post, you can see Ray's simulation analysis and his recommended parameter package. For the last week, Ray's post has been up on the forum. He provided one parameter package because that largely achieved the outcomes that members signaled support for. and he invited others to review, replicate, and propose other parameter packages, but to date, none have been proposed, so there's no other alternatives. We talked about having a snapshot signaling vote to pick the best parameter package, but since no other alternatives have been posted, it's likely that we're going to forego that snapshot signaling vote, given there's just one that's been proposed. But we will wait until the end of the week for folks to review and for anyone to post any alternative proposals on the forum. And once this week concludes, then we're on track to move on to the Oracle buffer internal price and initial price parameters discussion next week. But largely, with this discussion on the forum, again, looking at what Ray has been talking about, he's put up some of the proposed parameters for this, which kind of fit into the parameters that members had signaled support for in part 1. So the target liquidity would be 5,000 ETH, and then the liquidity in and out speed would be 100 ETH per day. The initial budget amount would be the amount of exit liquidity that members signaled support for, which is 43,835 ETH. And the fast liquidity speed in would be the amount of ETH that's added to the pools daily before the initial budget is redeemed. The ratchet speed in the above and below pools would be the speed that the ratchet would move up toward book value. And the fast ratchet speed would be the daily increase in the spot price when it's below the target value before the initial budget is redeemed. So you have the initial budget and some of those initial parameters that would be there for that exit period, and then some of the longer term parameters that would be there to meet some of the other parameters, such as the 3-year timeline to get to cover-driven MCR and getting to that target liquidity. So I invite everybody to review this on the forum and share any comments if you have any, but largely I think the feedback we've received is that there's been no other proposed changes to these parameters. I'm pretty happy with Ray's work on this and the simulations he's put together. And I know based on his latest update on the forum that he's working on simulations for the Oracle buffer, internal price, and initial parameters discussion as well. Before I move on here, I just wanted to ask if anybody had any questions about part 2 of the liquidity parameters discussion.
Hi, Brave. I'll just jump in just with a further clarifying comment. That I think the one thing that may not be apparent is the while we have the snapshot votes for the periods, like the length of periods, so like the month of initial exit liquidity, and then like the 3 years for long term, we don't actually set those parameters specifically in the system. They're kind of implied by the liquidity speed in and fast liquidity speed in. So the whole idea here is if all of the liquidity is used is in the initial period, if all of the liquidity is kind of used every day, then it would take a month with those settings. But if it's not used, then it would take a bit longer than a month. And the kind of the same argument applies with the longer term liquidity speed in of like the 100 ETH per day. That works out at a 3-year time frame under some assumptions, but those assumptions may not hold in reality. So the 3 years is kind of that's not the parameter we put in. That's the result of the actual time period will be a result of the parameters we set and the market activity that happens. So yeah, probably just a point I wanted to make some people aware of there. But also, sorry to keep going, I just wanted to say that Ray's put a whole lot of effort into this stuff, so I'm kind of really happy with all the detailed work he's done behind the scenes here. So yeah, we're very confident in those kind of numbers and how they kind of represent the community's decisions on the snapshot votes.
Okay. If there's no other questions or comments, we can move on to the ecosystem updates. Here we've highlighted the teams and protocols that are building on top of the Nexus Mutual protocol before, but I wanted to share updates on their progress and the impact they've had on the Mutual to date. I'll start with OpenCover on the next slide. So on the 31st of August, OpenCover, which is an L2 coverage aggregator that's built on top of the Mutual, announced their launch on Base and Optimism. Coinbase Ventures announced their initial investment in OpenCover shortly after launch. Many members have asked for the option to buy cover on L2s to reduce the gas cost and to make cover more accessible to a larger retail audience. And with OpenCover's launch, that request is now a reality. Initially, OpenCover offers protocol cover for Aave v3, Morpho, Uniswap v3, Curve, Synthetics, Beefy, Angle, Safe, OneInsure, and Uniswap v2. And the OpenCover team is working to create awareness about their aggregator and get the word out that you can now buy cover on Base and or Optimism. If you look in the covers dashboard on Dune, you can see some small cover buys coming in that are coming from OpenCover. So we are seeing cover buys coming in there. I think it'll be slow to start and it'll pick up as they create more awareness and put more work into marketing and growth partnerships. And I'm really looking forward to seeing OpenCover grow and gain traction, given there are many new users coming in through Base and many newer and longtime users that are active on Optimism. As more people are active on L2s, I think there is a large opportunity to sell more cover where users are participating within DeFi and are more active on chain. And one thing to note about buying cover through OpenCover is it doesn't require KYC, which produces friction for a lot of people looking to protect their crypto assets. Reaching people on L2s has potential to drive significant cover sales, and I'm really eager to see their team work with others to get the word out. So you can look for more updates from OpenCover on their Twitter account and on the forum under the ecosystem section, and for any relevant updates about their staking pool in the staking pool section on the forum as well. But I will move on to the next slide and talk a little bit about Uno Re. In mid-August, Uno Re announced their launch of their Uno Watchdog pool, which is pool number 18. That pool underwrites Uno Re quota share cover. Through this partnership and cover agreement, Nexus Mutual underwrites 50% of Uno Re's risk for the cover they sell through Uno Watchdog, which is an incentive-aligned auditing service and threat detection system. In the future, Uno Re has the option to increase their quota share higher to underwrite a larger portion of their risk as well. But currently, Nexus Mutual is covering a little more than $200,000 for Uno Re, which is expected to grow as they sell more cover. And over time, as Uno Re sells more cover, Nexus Mutual members will earn more cover fees and benefit from their existing distribution network. Very much looking forward to Uno Re expanding as well. We held a Twitter Spaces with them several weeks ago to talk a little bit more about the partnership, but you can see the announcement on Twitter, and you can read more about this announcement on Uno Re's blog post as well. So very much looking forward to the Uno Watchdog pool growing cover buys over time and expanding coverage to more users in DeFi at the protocol level. But I will move on to the next slide and talk about Sherlock. So since 2022, we've been working with the Sherlock team to underwrite a portion of their smart contract cover. Our partnership has been going strong for over a year, and our quota share agreement has seen over 48 million in cover sold and earned members over 100,000 in cover fees to date. Sherlock has been running incentive-aligned auditing services for years now, and their staking pool has offered the highest variable APY since it launched. Through these quota share agreements, Nexus Mutual can offer an on-chain discretionary reinsurance alternative that can help both crypto native and real-world cover products gain the ability to pass risk onto the mutual, expand access to cover, and drive capital pool growth. I'm very much looking forward to seeing what Sherlock's done. Since we started our partnership, they've expanded their auditing services significantly. They are underwriting coverage for a lot of major DeFi protocols, and they're offering coverage right at that protocol layer, which I think is incredibly important to help secure more DeFi users. So I think this is a great example of the kind of infrastructure that we're providing for different auditing services or different people that are trying to protect others who have an existing distribution network and cover buys that are coming in, but need help expanding coverage and getting more access to underwriting capital. So very excited to see all the work that's been done in our ecosystem. Hopefully we have some more announcements to share in the coming months. but pay attention to some of those staking pools in the UI and keep an eye on those updates that we share in our weekly analysis on cover buys coming through these aggregators and staking pool managers. Yeah, I think we can move on to the next slide, talk a little bit about the investments update, and give an update on the status with the Kiln staking allocation. So Moss from Avant-Garde shared an update regarding the 62,624 staked in Kiln, that ETH staked in Kiln. Members had previously approved an allocation to Kiln through the Nexus Mutual Enzyme Vault. And after this was staked and the parameters for the vault were updated, the ETH was put in the staking queue, which at the time was 22 days. That queue has been cleared, and now the mutual's ETH is staked on the Beacon chain and is actively earning us rewards. Based on Moss's update, that staked ETH is earning about 3.21% APY, which annualized is about 213 ETH in estimated rewards. I think this is another big one because the Kiln allocation doesn't necessarily have an oracle or a liquid staking token per se, because we have that ETH managed through the Enzyme Vault and we have the Chainlink proof of reserves oracle that keeps track of the value of those assets. We can access some different staking options that we wouldn't necessarily be able to do directly from the capital pool. So very exciting to see this move forward. And there is still a portion of the Nexus Mutual Enzyme Vault that I believe the Avant-Garde team will be sharing a proposal for in the future and talk about proposing an allocation to Stakewise. Previously, that's what they had discussed in a previous RFC, which they kind of broke into two parts. One was this Kiln allocation, and the other one is the Stakewise allocation, which we're waiting a little bit more time once Stakewise V3 is launched. So yeah, very exciting. I think at this point with this allocation live, we now have somewhere in the realm of 53 or 54,000 staked ETH held in the Nexus Mutual Capital Pool, earning rewards for members. Yeah, that is it for the investments update. I will pass things off to Sam. Sam?
Thanks, Brave. I want to briefly touch upon the upcoming changes to the Nexus Mutual Discord structure and features. As I said before, we want to make our community have better access to information. I want to go over some of our objectives and also talk about what tasks are to be done. Our community has always been most active on Discord. We are present across many other social channels, including LinkedIn, Twitter, and Reddit. But with Discord, we have a lot more members active on a regular basis than in any of those outlets. We have more than 8,000 members, and we have about 38 members joining us new every week. In average, looking at the past month. And of course, one of our biggest priorities is always keeping our members safe from scam schemes. So please always be on the lookout for anyone pretending to be on the Nexus Mutual team, reaching out to you via DM, asking for wallet addresses, asking you to sync with some weird web service. While we have efforts to make it even more safer on our Nexus Mutual Discord, we also want to increase accessibility to information. We want to try out different types of channels that will help our members on their specific journeys with the Nexus Mutual app. We also want to establish a better connection to other engagement channels. The first one being our governance forum. We want to make sure that engaged members, interested members are aware of the many discussions happening on our forum. We also want to provide better individual support when a member or a team wants to reach out to the Nexus Mutual team. We want to make sure they have an access. We also want to improve onboarding and introduce more fun later on, but this last item will be a little longer term as we experiment with different types of activities. Next week, you will notice that we have new channels, new structure in our Discord. We will introduce a new verification system that will be frictionless. We'll also have some new self-learn comments where you will be able to self-learn some of the critical terms that help us run the mutual together. There will be some other functionalities and a new event support system. We'd love to get some feedback if you like anything in specific or if you think something could be improved as well. We are very much on the lookout for those. So pay attention to the upcoming changes and please let us know what you like and don't like. With that, I want to hand things over to Hugh for his weekly update.
Thanks, Sam. Yeah, just a couple of things from my side. There's really kind of going back to our two main things. We're looking at growth, so sales growth, and also tokenomics are the two main priorities from the foundation side. And so Brave's kind of given a bit of update on both of those things. In terms of the tokenomics, we're really spending a lot of time on testing at the moment, optimization of the contracts, gas, and all that type of stuff. Looking at all those tiny edge cases, making sure that they're all right, and kind of preparing things for audit, and also spending a lot of time with Chaos Labs doing the economic kind of audit and review. So making sure that kind of understand the system, understand the details, and working through kind of some of their initial thoughts and modelling and things like that. So once it gets into a bit more of a shareable format, we'll obviously get that out, but that's probably where we're spending the most time on the tokenomics side. On the sales and growth side, I think one thing that is really interesting is very related to what Lee was going through, what Brave was going through before, in terms of like Sherlock and Unire and other things like the retail mutual, etc. So what tends to be working really well is where Nexus is used as a platform for others to distribute coverage to end users, and that seems to be a very strong model, and so like excess coverage being shifted off and those types of things is where we're looking at, and so I guess on the sales side and the growth side, we're exploring different partnerships with people like insurance brokers and others, as well as looking to transfer more real world risk into the mutual as well. So those kind of big projects that have the potential to be quite large for the mutual, but they also take a while, and got lots of different elements to them, such as technical as well as kind of legal and that type of side of things. So there's definitely work to go on that, but I think those are the kind of main things we're focusing on the growth side, along with the kind of standard stuff in terms of slashing deals and like protocol cover, etc. On the slashing side in particular, we've seen our kind of deals with like Liquid Collective being increased in coverage and things like that. So I think one interesting thing here is a lot of the deals we've written, once if there is increased traction on those particular projects, then we kind of increase our traction as well automatically, and so we're kind of linked to the success of other protocols as well. So I think that's a good thing. It has potential to grow quite a lot given the right conditions. So that's probably the main stuff. I was away last week, so I'm still kind of catching up on a few things. But those are the main areas of focus we're looking at the moment. But definitely growth and tokenomics are the main two things. Yeah, and obviously happy to take questions if you have them.
If there are no questions, I will continue with the weekly analysis. You might remember from last month, we have moved most of our weekly analysis to the forum. You can always check them out on the Nexus Mutual forum in the Nexus Mutual Updates category and the weekly analysis subcategory. Looking at last week in cover sales, the Mutual sold about $3 million of cover, and members earned about $10,000 in fees. With Uniswap V3 cover being the most sold cover, it's a protocol cover, and it has been one of the top 5 or 6 cover products sold looking at a quarterly basis as well. We will start looking at this data on a quarterly basis too on the forum, so look out for those just as a side note. As Brave mentioned, we started seeing some smaller open cover sales recently, but they're not reflected here for the most part, as this is the data from last week. Now it's time for the open forum. If you have any questions or anything else that you'd like to discuss, this is the perfect chance to do so. If not, I want to thank you for joining us and have a great rest of the week. Bye, everybody.
Cool. Thanks, everybody. See you later.
Thanks, Sam. Thanks, everybody. Have a great week.